Okay, here's a weekly update of our option trading, our selling of cash secured puts and cover calls. If this is the first video you've seen in this series, each week I update the trades I made for the week and how much we made in option income. I retired just about 10 months ago, and the plan was to make about $5,000 a month selling cash secured puts and cover calls, and it's actually been going quite well and probably averaging closer to $10,000 a month when I'm focused on it more. And I was doing these once a month, but since there's so much action going on with them and people are interested, I start doing them once a week. So let's take a look and see what we did this week. But before we do that, you know the drill. You need to subscribe. And also, I want to remind you this is not financial advice at all. It's just what we are doing with our money to generate some extra income, and it's for entertainment purposes only. So I hope that you are highly entertained. So let's take a look, see how the week went. So to keep from making everybody wait, let's go ahead and highlight this here. And the total for the week was $2,614 down here. And it would have been a whole lot more if not for SOFI. So SOFI has taken quite the decline in price recently, and it has been not my friend. In fact, it used to be my friend. If you look back here, here's a fake SOFI ATM machine just spitting money out at me. So those were the good old days, and look how happy we were. So let's get back to the today. Let's talk about this one first, since it's all pretty red color here. I went ahead and I rolled this forward. So when you roll a trade, you're basically closing one and opening up another one. So originally I entered this trade on January 23rd with the expiration of 2/20. And what happened was I've been getting a couple of my trades assigned early, and I'm sitting here thinking about if I should roll them forward or what I should do with them. And before I can decide, I'm getting assigned early. So a firm right here is an example of that. So after I got assigned firm here today, I went back and looked to see what else was closing either today or next week or whenever. This SOFI trade was going to close next week, and rather than get assigned, I decided to roll it forward. So this is showing an $1,800 loss, but if I come down to see how I rolled it, it's right here. Let's pop a 0 in here just for fun. So if I highlight this one and this one down here, if I consider this one trade, since I rolled it forward, if for some reason SOFI will jump up between now and March 20th to at least $25, I will end up making $820 on these two trades combined. Now, if you look here, I did have a $24.50 strike price, and for March 20th, there is no $24.50 strike price, so I had to up the price to $25, which I did not want to do, but I did it. So anyhow, that's what's going on with that trade. Let's go back to the top here and see what else has happened. So some good news. Nvidia, the double leverage NVDL, double leverage of Nvidia. I sold a cash secured put on that back on February 6th for an expiration date of the 13th. Well, almost immediately that price went to $90.50. And my original strike price was at 80. And so since it shot up so fast, so quickly, I went ahead and I closed that early, like quite early. I think I did this on Friday last week. And then on Monday, it shot way up. Well, basically, it says 3 days, but it was basically 1 day. I went ahead and closed it for 635. So then what I did down here, I went ahead and sold another cash secured put actually on the same day and at the same time. So I kind of almost like rolled this forward. Maybe I did roll it and not close it and resell it. To be honest, I can't remember. But anyhow, I closed it and reopened it. I raised the strike price to 84. And then I was able to collect quite a bit more premium. And then I actually closed it just 2 days later. And actually, this is supposed to be 2/9. I had the wrong date there. So on Monday, I sold another cash secured put. And then I closed it on Wednesday, I believe, and then made another 490. And then come down here somewhere on the 12th, the next day, because that was the 11th. So the next day, the price had gone down to 88.25, and I sold another cash secured put with an 82 strike price and collected more premium. If that goes to zero, I will collect another $900. So this has been working out really well. So a lot of things work out well until they don't. So that's a key thing to pay attention to when you're selling cash secured puts and cover calls. So we'll quit talking about that. So Nvidia, if I add these two together for the 1 week here, $1,125 just from that one ticker. So let's see what else we got. So we got some cover calls going on. So usually most of my trades are cash secured puts, but since I've been getting assigned a few things, mainly Robinhood and SOFI, I've been selling cover calls, and hopefully it goes back up nice and slow and steady, and I can collect premium on the way back up to where my original cost basis was. So if you look at this one here, it's a Robinhood cover call. So the strike price I had picked on that one was 115, and I got it filled at 249. And what happened here was the price of Robinhood went way down. So I went ahead and just closed that early and locked in that $221 with the intention that perhaps the price would go back in my favor. You see here where the price was when I sold the put, and then it went down quite a bit. And let's talk about some of these other ones. So we have SoFi that we bought some shares of through cash secured put. And so I did a cover call there and collected $85 in premium. I won't go through these all in detail. So this UPro one, I think I did a video on that on Monday. I closed that. And I did a video when I sold it originally, and then I did a video when I closed it early and then locked in this $318. So you can check those videos out if you want to. Yen was something I traded for the very first time, and it worked out okay. Just took 8 days. I act like it took forever, but made $216. This UPro one took 17 days, which is okay. IoT, now this one here, I had 2 cash secured puts, and I wanted to free up a little bit of money to do a cash secured put on something else. And this was in positive for me. So I went ahead and I closed one of the contracts early, collected $49, and then I left the other one go. And it's still doing okay. It will probably either expire and I'll collect all that premium, or I'll close it early and collect most of that premium. And here's another Robinhood cover call, strike price 110. And same thing over here. If you look, it was 83 when I sold the cover call, and then it went down to 75. And I went ahead and closed it early, hoping that the price would go back up a little bit. And then I do another cover call and collect more premium. And I don't know if that happened or not. I think it did. So, and then another SoFi cover call. Didn't collect a lot of premium, but a little bit. And then, so these Robinhood and SoFi ones, I'm going to be selling cover calls and not collecting a ton of premium, but still a little bit. And then there's that Nvidia. And I still got some Robinhood cash secured puts that I had, and they got assigned here. And so I had to buy those. And when I say buy those, I mean buy 100 shares of stock for each one of those contracts. And then another SoFi cash secured put. Oh, that's the one I rolled forward. And then I sold a cash secured put on Affirm for the very first time, and it went down. So when I sold the cash secured put, it was at $72, and then it went down to 50, and I got assigned early, and my strike price on that was $67.50. And then BBAI, I had a little bit of money, like $3,500, and I did 7 cash secured puts. And I've been kind of watching this for quite a while, and I actually sold some cash secured puts on this previously and did okay. It's very volatile. It's kind of new. It's got some government contracts, and I typically don't mess with stocks like this, or a firm could be in that category too. I should stick to the indexes like Yen and UPro and tqqq, which is weird. I have no tqqq tickers that came off the board this week. So maybe I should stick to the ones that have been treating me well over the past several months. Anyhow, I think I'll get assigned this today. The expiration was today. I didn't look to see if I did get assigned. I might not know till later, but I'm assuming I will. So I went ahead and put that down to 0, and I will have collected that premium. And then my cost basis on that will be $466. So what I'll do Monday is sell cover call on BBAI, try to pick the $5 strike price, and go out probably a couple weeks in order to get enough premium. Depends on what BBAI does on Monday. Actually, Monday's a holiday, I believe, so it might be Tuesday. I need to go above 466 to break even, so I'll probably pick $5 for a strike price. And then I've been keeping track of the basis of where I'm at for these shares. So like this one here, the strike price was 25, but when you calculate the premium I earn when I sold that originally, my basis is 23.91. And same thing here, this is 24.88, and then this one here is 112. Let's talk about that one there for a minute. Slide that over. There's a couple we want to talk about. So I was assigned a couple different Robinhood cash secured puts, and this one here and this one down here. And they're from the same account that I have. It's an IRA. And what I did was, some people call me crazy. So I ended up buying 200 shares of Robinhood. One batch was 120 and the other batch was 115, actually. Get that right. And so the basis originally was, for this one up here, was 110.54, because I collected this big chunk of premium for it. So when you subtract that off the total, my basis is 110 approximately per each share. And this one down here was 115. If you subtract that little bit of premium I got from that one, the basis is 112. What I did when the price of Robinhood was down like $70 a share, I bought another 100 shares of Robinhood for $70 a share. So in this account, now I own 300 shares of Robinhood. And so this one and this one. And the other 100 shares doesn't show up on here because I haven't done any options on that yet. The reason why I did that is because I wanted to get that average down, so it's at $99. Basically, I got 300 shares of Robinhood, and the average price per share is just a little bit under $100. We'll call it $99 a share. What I'm going to do now is sell cover calls on that at probably 105. Now, some people like to keep their batches of shares individual. So some people will say, I got one batch for 120, I got one batch for 115, and they keep those separate when they sell cover calls going back up. I decided for this particular stock, this particular time, I'm going to treat that as one basket of stocks of 300, and I'm going to sell the cover calls for 105. And hopefully Robinhood will either stay even or go up over the next month, 2 months, or 3 months, or however long it takes until it gets back to like 105 or whatever. If the timing is right, I may change that strike price if it expires or whatever. I might jump that strike price up from 105 to 110 or even 115 and try to make some money on the appreciation of Robinhood, because I really think Robinhood is going to go back up to where it was, somewhat where it was before. And if I click on the analysis tab here, for the past couple of years, revenue and earnings has been good. And if you look to see what the target price is from the analysts, they got it like 133. Even the lows they got at 90 and is currently at 75 or 76. And most of the ratings, if I adjust my resolution here a little bit, and here you can see the analyst recommendations. There's still a lot of strong buys, some buys. Way down here, there's some holds and some sells. It's still getting good love from analysts. So that's why I decided to go ahead and buy an extra 100 shares and go ahead and bring my cost basis down to $99 and use that as a guide going back up to pick my strike price. All right, so did I cover everything here? And then I think I talked about Affirm. I sold a couple cash secured puts on that at $67.50. Got a sign early. My cost basis on that is at $63.62. And if I scroll up here, you see I got some cover calls here. Here, Affirm, I went ahead and sold a cover call on that. And I did something I typically don't like to do. I picked a strike price below my cost basis. So my cost basis is $63.62. I picked one at 60. And the main reason is because there just wasn't much premium there. If I put 0 in there, it's only $72. And the delta on that is 0.11. Odds are that I won't get those shares taken away at 60. That will probably expire. And this is 2 weeks from now, kind of a short expiration date. If they do get taken away at 60, that means I will have lost like $600 or $700 about, but I could probably live with that without too much sorrow, especially when typically I'm having some pretty good weeks here. And next week will be the 20th expiration date, next Friday. So I got several other cash accrued puts expiring. I may get assigned lift. And AMZU, I may get assigned AMZU. Now, something else I did, I bought 300 shares of AMZU when the price was down below $24 a share, because it's the double leverage of Amazon and it's down quite a bit. And I don't think it's going to stay down for long. And what I'm doing, I'm anticipating that I will get assigned these 500 shares here at 35. So kind of the same thing I did with the Robinhood. I bought those 300 shares at 24 something. Probably next week I'll end up owning 800 shares total. This 500 here, take that times 100 plus the 300 I just bought. And so that would make my cost basis down closer to, let's say, $31, $32, probably somewhere in there. And then I can start writing cover calls somewhere above that, like 32, 33, whatever, and then collect premium as the price of AMZU goes back up. So that's my plan. And then probably the biggest mistake I made, because I made more than one, was selling cash accrued put on BITX about a month ago, or a couple weeks ago, thinking that it had hit its bottom, and I wasn't correct on that one at all. Here's that other IoT. And then I got some cash accrued puts on Tesla at a 16 strike price. So these will probably either hopefully expire worthless. So if this goes down to 0, hopefully that happens. If not, $16 is not a bad price. I got these double leverage Microsoft, actually just one on that one. I got a couple tqqq cash secured puts here, this one, 5 contracts total. So those should treat me good. They usually do. And then what else do I got? Yeah, so a little mixture of some cover calls and some cash secured puts going forward. And hopefully the market does what I want it to do. And I'm happy and I'm making money. And we'll have another good week next week, which I think we will. So we'll wait and see what happens. So that's an update. Kind of a interesting week of how I'm trying to manage things, of getting assigned and doing the cover calls and trying to squeeze out a little bit of premium on those cover calls as the price settles down and starts going back up. I'm trying to share the good and the bad. And you see there's the bad right there, but along with the good, like those Nvidia ones. So if you like being entertained by that type of thing, go ahead and subscribe, and we'll see you in the next video.